Welcome to Options Center Weekend Update. It is 3/20/21. Happy Saturday, folks. We have tons of great information to go through, so stick around. And if you like this information, hit that like button. It helps us spread the word and spread the wealth. We want to keep brand new traders informed. And go down to that bottom right-hand corner with the Options Center logo and hit the subscribe button. And then you can receive all this information all the time, every day, 2 times a day, as a matter of fact. So let's jump into it. We're going to move just a little bit slower than typical days because we want to be real thorough with our analysis. So we're going to start off on the weekly chart, work our way down to the daily and the 65. We're going to go through each point real thoroughly and show and tell a story. We have layers of technical analysis that tell our story for us. We're not fundamentalists. Fundamentals do work, obviously, but it takes much longer for those fundamentals to come intact. In the meantime, technicals are in control. So here we go. I left this on the top of the screen here. There's a lot of fear going on in the market, and I understand on FinTwit and things like that. There's constant fear mongers, and they get a lot of followers through that. Here are some items you can keep track of when you're thinking of being fearful that the market is way too extended, and so some people pay attention to the dollar, the bonds. The bonds have been controlling and putting fear. Is there YCC and bond control, things like that. The rates have been skyrocketing. Is it inflation? Is it, all these questions. So that's something you can pay attention. We're not going to do that in this video, but I just want to show you that. I think this is a healthy market, and I won't be proved otherwise until this fails, till this formation that we broke out of fails. Okay, then we can talk about other fear and what's happening. Remember, the economy is not attached to the market. These are all technicals. These charts are technicals. This is psychology of buying, of psychology of humans, buying and selling, not what the Fed is doing and things like that. I know there's influence on there. But anyway, so I'm calling this Rotation Nation. See, we broke out of this a nice megaphone formation. Just like this one earlier, I think we're making brand new highs. Now, it's not going to look, it'll probably rhyme like this, probably won't look exactly like it. Doesn't mean we're going to have a blow off top, but just pay attention to that while we're talking through some of these things. Rotation Nation, I think it's very healthy that we're depending on the banks to pull us and the small caps to pull us up. And then when they have to back off, then you have tech jumping in. Okay, everything makes sense. It just keeps the market going higher. And if you want to consider the Fed, yeah, they're doing everything it takes in order for this to happen. This is one of the pillars of our economy, and to prop the stock market, yes, it's gonna allow businesses to borrow money and to be healthy. And there I go on a tangent again. Yes, we do want the stock market to go up. We want to keep this going, but yeah, one day it's going to have to come back down. I get it. All right, and then we have the fear greed. Over to the fear greed. Let me get this off the screen. There's not excessive fear. There's not excessive greed. Things are right in the middle, right in neutral. There's nothing, that's an indication nothing is really wrong. You have the AII that's happening. We're not overly bullish. Yeah, we're up there a little bit. We're not overly bearish. Obviously, we're not overly bearish. So just a couple of things to look at for you, and you can save those. You have the CNN fear greed and the AAII survey, sentiment survey. So you can save those in your browser if you want to keep those for yourself to look at. But now, checking out the charts, looking at the candle in particular, just a doji candle doesn't necessarily mean it's a reversal. We'll have to see what happens next week. Dojis are by nature just pause candles, so we can go up or down from here. Doesn't mean anything, but overall we're bullish. We are over the 8MA, 20, 50, 100, 200. They're all pointing to the upside, so we're really healthy on the weekly. Over to the MACD. We did have a crossover, but we're really just moving sideways, but we're deep in bull territory. Okay, so there's not much fear unless you see these histograms start to really go. You know, that's an indication like, hello, something is happening, and you'll probably see it in price action moving really hard. But remember, we have our rising pivot here. We have something to put our backs against when we're trading. We know we're pretty safe, and it just happens to coincide with that 20 MA. Okay, in the RSI, not nearly overextended. We're at 62. This RSI starts to get a little overbought at 70, but can go all the way up into the 80s if it really needed to. If the hot, if everything was hot and momentum was up. So just bullish on the weekly. Headed down to the daily, and daily trend is our friend, and then we'll do the expected move as well. Okay, so threw in some trend lines. That's our rising long-term pivot. That's what we're going to put our backs against too while we're trading. Once we break this pivot, then we have a whole different mind frame about whether we're really bullish or not. All right, so we had this resistance here for some time now, and it's now working as support, and it's also the 20 MA. So this is a great way to, in the near term, to put our backs against. I think this correction is over, and I have a little bit more evidence on the 65-minute chart. Looking at the Elliott wave count, I do believe this is either 1, 2, it doesn't matter, or this is a 3, 4. Coming from back here, 1, 2, 3, wave 4, and then we have a new 1, 2. I don't believe wave 1 is actually over yet, and I'll show you why on the 65. The fib retracements, we did get our 38.2. I'll show you that in a minute. It's a doji candle. This is a potential reversal candle. It shows that there's some demand at this point, and pushed off that demand to give us now technically it's a pause candle, but with that nice wick like that, we get our reversal look. Okay, we're over all the MAs except the 8. So that's where the reversal comes in. If this next candle can push up from inside this candle, or even gap over this 8 MA, then we're looking really healthy and bullish again. Until then, that's just a little caution sign that the 8 MA is starting to curl down like that. If we can't get over the 8 MA, something else is starting to happen. Okay, moving on to the RSI. The RSI, it's real typical. We moved up to the 60, 61 area. We're coming back to test the 50. It doesn't have to be exact. Coming back to test the 50, and then we want to move higher. Just get a higher low, higher high on the RSI, and let's see if we can work our way up to the 70 range. And then the MACD, we made our bull cross. We are starting to point. We are going to retest the yellow leader line. It's going to retest this blue MACD line, and we'll see what happens from that point. And then we'll probably, if we get more, higher highs, we're creating divergence again, which is something just to keep an eye on. But until we get some momentum to the downside, it doesn't matter. Not at this point. All right, moving on to the expected move. Usually I'm railing through these all of these technicals, and if you've been following me before, you'll see I move quick on these. But we want to be thorough here on the weekend. So we have the expected move. The expected move is, we consider this our playing field for the week. Last week we didn't touch either sideline. Usually we come close to touching those sidelines. We actually use those as kind of targets in a sense on whether we're going to hit the bottom or the top. But ultimately, there's a lot of fundamentals behind this, and big firms use a lot of you hear about gamma and all these hedging and hedgers that occurs. Well, that's a lot of order flow from the options market and through the SPX, the ES, and the SPY that kind of dictate whether price is going to stay within this area or not. So you start off the week with this white line, and then we draw in our outer lines to see which how far the market can move for the week. And how do we get that? We go to the SPX, we go to the trade tab, and just know that last week was 74 points either to the upside or to the downside. We go to next Friday's options expiration, and we just check out, see what's happening here. We do it on Friday after everything closes, and we had 76 plus or minus 76, 72. I mean, that's not a huge difference on a 3,000, almost 4,000 point product. So you check out, we're using the 76 plus or minus from Friday's close, and from this start point, we draw a line up here that's either 76 points to the top or 76 points to the bottom. Now, of course, we're bullish, so we think that we'll hit that top side. But that's just, we can't underestimate it. The market likes to start down, on Monday and then head straight up by Tuesday and Wednesday to hit the top, and then the hedgers kick in and keeps price, in the center within this range. So, anything could happen. It's not going to give us exactly the direction. It just kind of gives us a framework. Okay, so that's the options expected move. I'll put a link right above, up top there. Let's move down to the 65 on the ES. All right. So what happened last week and the week before? We had our wave. We're working on wave 1 right now, and I still think we're on wave 1. And here's why. We had a wave 1, 2, our major wave 1, 2, and we're working on wave 3. And I believe wave 3 just ended right before we had a correction. So a 1, 2, and then a 1, 2, 3, 4, 5, which would be the end of wave 3. Okay, so in wave 4, we're working on wave 4 right now. Is it over? We did hit our 38.2 target, but wave 4s are unpredictable. They can be wedges, they can be pennants, triangles. We have to let these unfold. I don't think we'll go a huge amount to the downside, but we shouldn't cross over wave 1. That's just one guideline that we look at. And if it's crossing over wave 1, then it's some sort of formation. Maybe it's a flat overall and whatnot. But so we shouldn't come down past the 61.8. But don't get chopped up in here if you're doing if you're day trading. Okay. So next we're looking for wave 5, and that can be in different formations. We could have a flat, just like this wave 5 was a flat. We had wave 4, and then 1, 2, 3, 4, 5. You see how they can cross over each other. So that's a wave 5. Now that could happen again here, but not likely that it'll just repeat itself like that. So let's just keep our eye, let this play out. Still bullish, holding calls, and the individual names will move while this is happening in wave 4. So that's why I keep playing individual names. I'll probably do some day trades on ES after this unfolds again. So what are we going to do next? So looking at the MACD cross here, we're trying to work the momentum back to the upside, nice and healthy. And the RSI also had some bullish divergence headed to the upside. And so that's why I think this wave 4 might be done. We'll see from here. We have to get an impulsive wave. Maybe that's our first little wave 1 and wave 2 to the downside, and just stay, in our first impulsive wave 1. Okay, and you have our minute wave 1, 2, possible, okay? But we got to work our way above these trend lines here. If we can't break above these, something else is happening. That means we may have further to go down. It might be a wave 1, or I'm sorry, wave A, and then a B to the upside, and then C down. At this point, we have A, B, C already, but that's just a small one. We might have a bigger one, A, B, C. Okay? All right, do we have anything else to go through? We have the SPX 76 points volatility. Volatility is subsiding. That was the things that I showed you earlier. If you're paying attention to that, you could look at volatility with the VIX, the VVIX. It's a professional tool instrument. It is over 110. Theo Trade calls it Vama zone. Anything over that, we should have a little bit of fear in us. But anyway, all right, I've said enough. This is a 15-minute video. Thanks for joining us. If you stuck all the way through here, please hit that like button, subscribe, and thanks for joining us. We'll talk to you Monday morning with some trade ideas. Have a great weekend.